You're somebody who looks at this with the same sort of metric all the time. You want to explain to people how you value stocks, how you try and find out if stocks are cheap right now or expensive?
Well, yeah, just the 30 seconds on the top down. It's the three R's for Powell. One, he has to look at rates. We have to look at rates. We have to look at the runoff of the debt. And then, more importantly, his comment about reduction in the aggregate. So from my point of view, when we look at companies, we look at sectors that will do okay over the next several years, but also have interesting companies. In that regard, we take a microscope to the P&L and the balance sheet. For example, companies that have commodities as pricing and are in the manufacturing sector, they price on FIFO, first in, last. They price on LIFO, last in of a good. They price it as first out, but their accounting is, and I don't want to get into too much details on this, is FIFO. Then we worry about currency. Then we worry about taxes. For example, there's a lot of confusion right now about this new 15% tax on tax profits and book profits for U.S.-based companies. Not the 15% globally. So when we look at that, we say, okay, what do we like? We want to buy agricultural companies. This year, Becky, $535 billion of cash, up from 400 odd billion, goes into the farmers because they're working their fannies off from fence to fence. So we like companies like Deere, but we particularly like at the moment Case New Holland. There's 1.3 million shares. The stock is around $12. We think they can earn $1.50 to $2 within 12 months. And if Deere is going to earn $22 plus or minus, and that stock is 305. This one, 305 million shares, and this stock should follow in that wake. So that's an area that we like. We visit the companies. We go out and try to figure out, kick the tires, so to speak, on the equipment. Another area that we like, we had a 28th conference annually yesterday. 15 companies presented. Most of them were there. Several were virtual. Two companies in the aerospace and defense industry. One is Aerojet. Aerojet was the Federal Trade Commission in early February, based on the data they had, turned down Lockheed, and Lockheed walked away. That was a $51 deal. The stock's 44. We just bought another close to 800,000 shares within the last week or two. We just filed last night. They're going to earn a couple of bucks. But what I'm interested is their capabilities in hypersonics, their capabilities in the ground-based strategic defense, GBSD, which replaces the Minuteman. Eileen Drake is running it now. And, we think that maybe the FTC should re-examine the data they had when they made that decision and allow this company to take their technology and accelerate. Another company that presented yesterday, which is also going through financial engineering, was Crane. Crane has 56 million shares. The stock is around 94. Basically, we think they earn $7 to $8 in the next 2 years, and they're going to split the company into two pieces somewhere about April of 2023. So those are another sector. And then obviously, when you look at the economy, there's 1,100,000 cars on dealer shelves. I've been following this industry for 55 years. At some point, you're going to have 2 to 3 million. Demand has been very low for the last 3 years. There's a huge replacement. And for those that are listening, if you have a car on a lease, don't turn the lease in. Examine what the used car price is. Exercise the lease, but then you can't replace it. So keep it for a year or so, because used car prices will give you a good windfall. And then finally, I like baseball. The LA Angels put themselves up for sale. We'll know in a couple of time period as to whether they get $2.5 billion plus or minus 2.4. And that brings me to the Atlanta Braves. Now, the Mets fans don't like me in New York. And I'm going to be in Philadelphia next week. And so the question is, what's it worth? I think Malone and Maffei will are in a position of doing it. I think they're examining the implications of this tax on corporations relative to the size, and that's part of what everyone is doing from a financial engineering point of view. So that's what I'm doing, Becky.
Talk about the financial engineering. This is something that will have broader implications. What is everyone examining right now to try and figure out this new tax that's coming?
Well, corporate taxes are about $400 billion. They're significant. They're up from $200 billion several years ago. And so the government then put in a bill that says if you have a book tax, effective tax rate of, let's say, 23%, but your cash tax is 10, and assume for practical purposes you're strictly a domestic company, Basically, if you have over $1 billion over a 3-year average, you may have to pay a cash tax of about 15%. So that's where then the calculation is whether you do spin-offs, financial engineering, does that add to your, and look at the average for the last 3 years. So that's work in progress. We're waiting for the Treasury to give us the details. And that's an element. The bigger element is obviously private equity. How are they going to pay for acquisitions? What does they believe is a terminal multiple? And can they finance? And then in addition to that, strategics, corporations want to buy companies. Right now with the FTC in the United States and what's going on in the rest of the world, regulations are presenting a challenge. So if I were looking to make a deal, I'd probably wait till after the election, which is only about, what, 40 days away, 45 days.